What's happening, everyone? Today we're talking about the signs it may be time to ditch your bank and how to select a better checking account. First things first, you need to ask yourself, why do I use a bank? This can be an annoyingly simple question, but it's still important to think it through. A lot of people open bank accounts so they can take advantage of direct deposit, which saves them time otherwise spent depositing checks and enables them to have faster access to funds. In fact, direct deposit is the standard for salary payments, and according to the 2019 Getting Paid in America survey, 93% of US workers receive their pay this way. Many people also ascribe to the traditional banking system due to the insurance it provides compared to something like putting money in your mattress or burying it in your backyard. The standard insurance amount the FDIC provides is $250,000 per depositor per insured bank for each account ownership category. This isn't a policy you have to purchase yourself. Once you open a deposit account with an FDIC insured bank, you're automatically covered. Credit unions also have federal insurance through the NCUA. People also use banks for cashless transactions. According to the 2020 McKinsey Global Payments Report, the use of cash-based transactions declined by 50% in 2020 compared to 2010. Prior to the pandemic, I personally had observed a growing number of businesses that don't accept cash. I don't think that folks who primarily deal in cash, whether due to choice or circumstance, should be excluded from getting ice cream or online shopping. However, considering the broader banking landscape, I'm a huge advocate for having a bank account when possible, as it will definitely help facilitate various types of online payments. Let's talk about things to avoid when it comes to banking. The first is unethical business practices. Let's say your bank is constantly making headlines for predatory lending, creating fraudulent accounts, or a myriad of other questionable, if not altogether illegal actions. It's probably a matter of time before you end up on the receiving end of their bad business. If you're considering a bank that's always making news, but for all the wrong reasons, it's probably a good idea to skip go and don't worry about collecting the 200. Additionally, while we would love to have 100% 24/7 uptime for banks and their associated services, the reality is that mistakes do happen. Banking infrastructure can become unavailable for a variety of reasons. If your bank is regularly experiencing high severity outages, you may want to consider jumping ship because it's possible that one day when you need your money, their app might be down or call centers could be completely unavailable. So these are things that are important to think about. Lastly, skip out on banks where you have to pay to play. What I mean by this is that you need to be mindful of the various fees you're being charged. Remember, you're using a bank to retain, if not increase, your money, right? So it doesn't make sense to lose some of it every month when you could instead be getting paid by your bank to hold your money there through an interest bearing checking account. As you think about banking with a company that's more aligned with your interests and needs, you also have to ask yourself, what do you actually use in a bank and what matters most to you in your banking experience? Some folks like being able to pay bills like utilities or student loans in a consolidated place through their online banking portal. And other people like having intuitively designed apps so they can manage their finances while on the go. It's important to know yourself though. If you feel like you currently can't be at peace without knowing you're 5 minutes away from a brick and mortar banking branch, then going with an online only option is probably not the best fit for you. And then you want to think about other features as well. Last year, I wanted to improve my budgeting practices and start reviewing my total spending on a monthly basis. And I'd never tried using the feature before. And at that time, I was disappointed to learn that one of my banks simply does not offer any spending review tools on their website. Now, I know my way around a spreadsheet, so it's not necessarily a deal breaker for me. But for some folks, that could be a reason to stop banking with them. So you want to be sure that your high ticket needs, you account for those before switching over. Okay, so some people might be feeling convinced and like wanting to change their banks anyway, but folks might also be thinking like, okay, but why does my bank matter, right? Like, how does this impact my bottom line? I want to talk through this a bit more, right? So let's give you the example of two friends with similar financial backgrounds and similar habits financially. So let's say there's friend A who is banking at a bank with a $12 monthly service fee that they're paying every month, 0% annual percentage yield when it comes to interest on the account. And then they also have a 3% international purchase fee. And let's say this is somebody who, for personal reasons, isn't really using credit cards. Let's say every year they take a weekend trip to Latin America and the Caribbean and they spend about $500, right? So they have 3% fees on $500 on an annual basis, right? Then let's compare that to friend B, who has a bank account with a $0 monthly service fee. Their interest is 0.1% annual percentage yield, and they have a 0% international purchase fee. Let's further assume that each friend begins with a $100 balance in their checking account. Every month, after all of their expenses and transfers to savings, retirement, and so on, they see a $100 net monthly increase in their checking account. After 1 year, friend A is left with $160 less than friend B just because they bank at different places. After 5 years, the difference in their balances grows to more than $810. Obviously, we're working with small balances here, but this is just to illustrate the importance of paying attention to fees and figuring out how you can avoid them. Many banks clearly outline their fee waiver criteria on their websites. If you're in the market for a new checking account, you may find yourself Googling something like best checking accounts. These websites can be a helpful starting place, but a lot of times they are affiliates of the banks they're promoting, or they in some way receive a commission based on the reviews they provide. That being said, it's important to perform due diligence before making a decision. If you're wondering whether or not an article like this is commission based, check the top and bottom of the web page. Usually you might see a message like this. Many or all of the products featured here are from our partners who compensate us. Um, if you think you found an account that meets your needs, before opening the account, you can also check out my March passive income video where I share how I made $200 just by opening a new checking account. If you have any checking account tips, please leave them below in the comments. As always, I hope you enjoyed this video. Please like, share, and subscribe if it resonates with you so I can continue pushing out more content.